Yo, good morning, everybody. Oh shit, whoops. Was there a... Where's there an echo? Oh, whoops. But yeah, let me know if you guys can hear me okay. See everything okay? Been having some issues this week. I don't know why. I have no idea why. Like, it doesn't want to let me allow for the stream to unfold. It's like the other day it tried to force me to remake the live, or like it wasn't letting me go through my streaming platform to start the live. So strange. What's up, DJ? If everyone gets here, where should I start with your training? Yeah, so the prerequisite, if you haven't went through the 2022 yet, it's definitely the 2022 model, because it gives you a rough overview of pretty much all critical ICT concepts, teaches you framework, it gets you exposed to the stuff, so then it becomes a little bit more familiar. I do have a course that I'm making for you guys in my private group, but that's not going to be done for a while. And the ones that have early access are my one-on-one students. So there's that. It's in the mega link, the mentorship video section. But yeah, the prerequisite that I have everybody go through is the 2022 model, because again, it's a very easy to digest. Not many of the videos are super long. He kind of on purpose went straight to the heart of the matter, took his whole 2016 stuff, and at least put a lot of the critical elements in place for you to be exposed to them, like Power 3, the entry model, so you can go in there and have something to look for. We use a 2022 model, but of course we have 6 other models as well. But the 2022 model, there's a reason that it's a favorite. There's a reason it's so popular, and it's because it's just super visual. And that whole series again gives you a really, really good head start. So then, when you're learning from me, it makes it just a little bit easier for me to teach you, because you're already familiar with certain concepts, and then I can just fill in any of the holes that are there, and then of course give you our process as you watch us do this every week. Well, for you every single day, because you're in the private group. Yo, good morning, Tony. Good morning, DJ. I think that's DJ, right? Servan Demora. Good morning. But yeah, so do you guys have any other questions before we get started? Everything's pretty much done what we anticipated it to do. Talked about it getting above this fair value gap. I wanted to see if we can return into it as like an anchor, but it didn't really return to it yet. Maybe it does it today, because tomorrow is FOMC. Well, FOMC, federal fund rate. We do have news early on. I think that the bigger, more pronounced move is going to happen later on, right? But we'll see what happens. Trump's apparently speaking. They added this last night. I didn't see this yesterday, so you guys know how crazy that is. Japan, there's some crazy stuff happening with Japan. They are adopting cryptocurrency more than most people understand. XRP in particular is now part of their banking infrastructure, but it's also their investors, or just people that have bank accounts, now have the ability to, instead of getting interest in cash, they're now offering exposure to XRP, Ethereum, and Bitcoin as a rewards choice, right? So instead of cash rewards in terms of interest, they're actually going to now offer the ability for their millions of people to now be participating in the crypto market through that soft adoption, right? It's kind of exposing people that may still not understand crypto, which is kind of crazy, but it's kind of allowing them to be exposed very softly, right? That's what institutional adoption looks like. It's very quiet, it's very slow, very boring. While everyone's focused on the chart, how it's dropping and many assets, it's things have rallied a little bit recently. But while everyone's focused on getting out of their positions, being scared of crypto, thinking this, thinking that, legislation is passing in all countries. Some are further along in terms of the legislation than the US is, but with the Clarity Act coming, I think that things are about to get real exciting in crypto. Obviously, I don't talk about much more than the assets we look at regularly, but just know that I got my hands in many things, and I've talked about XRP and some other cryptos for over 8 years now and been invested that long. So I know a thing or two, right? I've been digging into all the boring things that nobody likes to look at while people are chasing meme coins. I have been, you know, pretty loudly exposing different resources that share what is really going on with crypto and what players are going to be here. XRP has been sued. They have been attacked by the government. They were in the Epstein files being talked about as a threat to the SWIFT monetary system by Epstein and bankers, right? There's an email specifically that talks about this. So I think they pissed off the right people, at least in my opinion, and just further strengthens the resolve that I've had in XRP, XLM, and some of these other utility tokens. Because when you're invested in XRP or something like XLM, you're investing in a token that is a tool that's going to allow for their technology to do what they say it's going to do, which is revolutionize the financial system, remove heavy fees and wait times, which is something that, you know, the banking industry has a lot of. Like if you're trying to get a loan for a house, it takes a long time to get that process to unfold, to verify, to, you know, get all these things in place. When XRP came into the fold, they're looking to fix those frictions in the banking sector, right? For many different things. I mean, there's other things too that we can get into, but I'm not going to spend today talking about crypto. But just know that there's a lot of stuff happening. I saw the Bank of Japan showing up right here. So, you know, it's very interesting. There's a lot going on with Japan. Okay. Let me know also if the music is too loud for you guys. Can you guys hear it? I'm not sure how it sounds on your end. It sounds okay to me, but I just want to know so it's not distracting. Music is perfect. Okay. DJ, do you have headphones in? Probably. Maddie, you might not. Do you have your headphones in? I think it'll depend on if you have headphones. But yeah, it's okay. I don't want it to be too loud anyway. But yeah, so yeah, see, that's the difference right there. Okay. Yeah, I'm cool with that. I don't want it to be distracting, right? I just want it to be in the background. So yeah, again, we have lots of news tomorrow. So it's a day before the big news comes out. It's going to be, from what I understand, the first FOMC meeting and rate announcement with the new Fed chair. So I'm expecting fireworks at some point. Now, the question you got to ask yourself is, are they going to run up to our target that we've had outlined since Sunday early, tag it, and then maybe slam down against it, right, off the heels of the news, and then maybe continue from there? Or are we going to, say, break down below these levels, attempt to get down to the new week opening gap, which I don't think it has a high probability of doing at this point. We've already now closed above this inversion on the daily chart. So that has now confirmed this as an inverted fair value gap. So if anything, you know, we may come down to try to clean up some of the previous London lows here that we talked about yesterday. We wanted to see those get tagged before we saw any real rally. But obviously, because of the Iran deal, because of all the stuff happening all at once, it's kind of just been reluctant to do so. You see this little red line in here? that's showing that we have SMT at the highs. Whoops. Let me get back to that. See, that's showing that we have SMT at the highs there. Let's go see. So we got it right there. You see that? The discrepancy. So Nasdaq is the strength holder. So any type of decline should be more shallow, given that the Nasdaq has that higher high and the Dow has the lower high. ES has a lower high too. So ES is a weak one of the three as well. Then again, if you look at the daily chart, we could see there's SMT at the highs between the indices already as well on a bigger perspective. We actually have a regular trading hours gap up there on ES. That's interesting. Yeah, right there. You see how there's no trading in that area from that wick? There's no candle in there, right? There's buy side in here, but nothing buy side or sell side was offered in this area. It was offered here with this wick, but it hasn't been offered up here. So that's inefficient. So that becomes a target as we look to continue to reach for those highs. Before it gets to those highs, it's going to have to reach into that first. So that plus the highs up here, plus this being a market maker buy model, it really puts into focus the fact that we're going to try to get up there. The question is, because this is high resistance, right? It's consolidation. We do have equal highs up there, but nonetheless, it's still consolidation. The question is, are they going to want to create deferred liquidity in here where they set a high, set a low, fail to break the high, and then break down, couple some of this liquidity with then smart money buys to get up into here? Unless this new week opening gap is violated, unless we break down below this low to that highs 50% level, unless it smashes through that, everything is going to remain bullish. Okay, so shorts are going to be short-term in nature. It's very logical to see them come down below this before they look to go up. That's liquidity, right? So counterparty would be this low. If they come down, sweep that, and then, you know, respect the gap in here that we talked about the other day. Obviously, this is the S&P, but, you know, it's correlated assets. They should do very similar things. Unless it breaks through these levels aggressively and then reclaims this, again, all it's doing, it's running off this low that took stops over here, hit this bullish order block, okay? And it started rallying, change in state, right? Respect to the change in state by showing the wick. And then we have the new week opening gap. We got big displacement, overlap of this inversion, closure outside of it, which creates the inversion validation. So if it comes down into that, I'd prefer to see that, because again, we're ahead of FOMC and rate cuts, potentially a rate cut. So if we can get this to drop down, what is that making people believe in the normal retail perspective? Right? That makes them think this is still high or a strong resistance level. Okay. So we want them to think that. And that's why it does this deferred liquidity idea, because this is, you know, retail's resistance. Okay. They think that because there's multiple highs up here, it should be strong. We don't see it that way. It's building liquidity. And if we get a failure swing that takes out this low here and then starts to rip to the buy side, what has taken place here, right? We go from consolidation, high resistance, to then low resistance, given the fact that this high, low, and this high here creates a failure swing. So a failure swing is low resistance. So if we can engineer that and come down and take out opposing liquidity and tag a PD array at a discount relative to where price is at currently, right? And then get a reaction, like an aggressive move off of that, then you could really get behind a justification for this to attack the buy side up here, these equal highs, and in particular, this regular trading hours gap as well. All anchored in this inversion, the stop run down here, the change in state of delivery, and then the deferred liquidity logic. Again, if we could take out this low, maybe even tag this, and then aggressively reprice towards the buy side. That would also create bullish power 3 as well. We got the open price somewhere in here. So if we drop down and then try to go up, that would be ideal. Again, because FOMC is tomorrow and we got rate announcement, it doesn't have to do bullishness every single day just because we're bullish on the daily chart. Today could be a time, given that we're a day before FOMC, excuse me, it could be a time where, because we're ahead of FOMC, that today creates the downside movement, creates a bearish candle. So then tomorrow, price can then rally up against it, create that change in state of delivery again, and then look to try to reach for the buy side, right? If you see on the daily chart, we are hitting an opposing PD array to this upside movement. So this bearish order block, when traded into, can present you with a counter trend move, especially since we're ahead of FOMC. It wouldn't be out of the realm of possibility or normality if we do see a retracement or just simply a bearish day today, right? So there's nothing wrong with aiming for that low right there. Okay, there's nothing wrong with aiming for this low right here. Okay, and then maybe even this little gap in there. Okay, there'd really be nothing wrong with that. And you may be wondering, why am I on these time frames and not going in there rabidly looking for an execution right now? Well, first of all, there's no news. So what are our rules? We don't take trades pre-market open when there's no news. Okay, especially ahead of FOMC, right? You can, but again, you either have rules or you don't. And you don't have to follow all my rules. But, you know, this is my opinion. I'm sharing with you how I see things. So, you know, it's good for you to think about what you're going to use versus what you're not going to use. And there's nothing wrong with you, bending outside of what I talk about. Obviously, you want to be an independent thinker. But again, I'm just here to show you my perspective and how I'm doing things. So then you can pick and choose what you want to use or not use, right? And you can see whether the stuff's effective or not, or worthwhile to follow, right? So let's go to the 4 hour, see if we can get some type of gap to outline. See, we got that. Let me zoom in real quick, see if there's discrepancy here. See, I wouldn't say that there's a discrepancy in there. So we'll look to use this. Okay. Use that little gap in there. I wouldn't be surprised if they try to come down into that. Again, when we go to 16 hour, 16 hour, we have the accumulation that I talked about yesterday too, that did hold in price as we moved on higher. This here looks like a market maker sell model to target that low that I identified for you. So again, is there a reason to be able to take a short? Sure. Right? But again, you either have rules or you don't. Okay? And I have rules, so I must follow them. Especially when I'm teaching somebody something. I can't say one thing and then go do something else. Okay? That inconsistency is something that, just it wouldn't be beneficial. But if it wasn't FOMC week, I would absolutely be in here trying to take a short targeting these equal lows here. Because, it's just blatantly obvious that we got equal lows. We have that SMT, so that supports it. Take this candle here, and you can also take this candle here. And if price is in fact going to keep going lower, it should respect these levels when it trades through them and comes back into them, because that's accumulation on the left side or bullish order blocks on the left side, turning distribution or inverted on the right side to then target very logical levels right here, being the equal lows. Counter trend trading is what's happening here. This move here is coming off of a bearish order block, right? On the larger time frame. If I'm not mistaken. Yeah, right there. So what is that creating? A counter trend opportunity. Does that counter trend opportunity mean that you're overall going to change your perspective and only look for shorts now? No, it means short term you can. But overall, you have to realize that this is a counter trend sell off until this fair value gap is retraded through, because then that turns off the interest of this being an inversion, which would upset the buy side delivery, and then potentially turn this to a reclaimed bearish fair value gap to then go lower. But again, that's later down the line. So unless that happens, I'm sticking to my narrative. Narrative doesn't change day to day. Bias can. Today could be a bearish day in anticipation for tomorrow's news event to then be utilized to go higher again. Because again, structurally, we have a breaker. We have all the things that we've talked about the last couple of days, leading us to believe that it was going to reach for the highs up here. This rejection block. And then, of course, when we go to the S&P, we have that regular trading hours gap as well that's available. Okay. So this is all the perspectives that we have and what we're going off of here. We do see that this is a bearish order block on the 1 hour chart. Okay, so it's also a bearish breaker here on this 15-minute chart. You could see that when price traded into it, it respected it and moved lower. We have a wick, okay, followed by displacement. That wick in there, as you're mapping out this as a market maker sell model, should be held up when it trades into this. If you were in a trade and you moved up to this time frame trying to manage the trade, you would be wanting to see closures below the midpoint of this wick. You'd want to see it close below this level in there for the breaker. Okay, let me get my charts. Okay. On the 2 hour, again, this is also a shift below, right? Again, I'm very interested in seeing how this is treated. All right, so we have an order block here. If it respects this and then we get above the midpoint there, that would then trigger my interest to want to go higher. But for now, although it is a bullish trend and that's what we're going to mainly be focused on overall, we want to see how this is going to behave here. Is today going to end up being a bearish day because tomorrow is FOMC, right? Are they going to come down and try to wipe out liquidity or engineer counterparty to their smart money buy positions? Before they want to go back to the buy side. Because again, this is what it looks like on the 2 hour, but this is what it looks like on the daily chart, right? So if you're not focused on the daily chart and you're only looking on lower time frames, this could be kind of convincing that buys are probably off the table. So when it drops down below here, you may be looking for shorts just overall, without even considering the fact that this could just simply be a small retracement to then target a level of support, right? Real support, to then look to rally up and go higher. We also have this 16-hour fair value gap. This could send a wick down into that, and then tomorrow's FOMC could then shoot it up to the buy side up here aggressively. So you can kind of see why you can hold on to this in one direction when you're starting from these higher time frames, and why it's so significant and how it can protect you from being fooled and giving up on the actual narrative too early. Okay. But again, is there anything wrong with looking to take a short, aiming for these lows? I mean, it depends on your rules, right? Clearly it's unfolding, the opportunity there. Oops. So let me actually move. Oh, wait, no. Okay, yeah, the blue line is already where it needs to be. Yeah, right there. Okay, so let me actually paste this as well. Okay. Okay, on a 2-hour chart, can you point out the characteristics of the order block you just mentioned? It's simply the last up candle prior to the down move. So the up candle here that took liquidity, once it displaced through that open price, when it comes back, it should be treated as a balanced price range because you got buy side, sell side. And this open price should be sensitive when it returns into it. But if you think about, how order blocks sometimes have multiple candles, these 3 candles here, right? If we move up, you could see that it fits a larger time frame bearish order block too, right? Consecutive up candles on the 2 hour. If you go to the 4 hour, it's 1 up candle, right? This is a thing you have to do in terms of drills. You take one PD array from one time frame and then go in and study what it looks like as you move around in time frames, right? And that tactic right there, what I just mentioned, if you avoid it, you're never going to understand these things, because it's a testament to the fractal nature and how lower time frame PD arrays work inside of larger ones. So all of you on this call, any of you guys that watch my content, this drill right here, if you have not done this, you have to do it. Otherwise, you're going to fail 100%, because you're not going to get familiar with how each time frame works within one another and how the PD arrays together work to create a picture as a whole, right? One time frame is working inside of another time frame. So, and again, if one time frame doesn't look clear in terms of PD arrays, you move up in time frames and then see what the story is relevant to each time frame, okay, inside of the larger narrative. So yeah, this is another drill here. So do I have that marked in my private group? I think I do. Let me go check the lethality drills. Guess I don't have it. Do I? Okay. Yeah, so I was missing that one out of the big. Oh, wait. Was I missing that? Yeah. Okay. But yeah, any of you guys in the private group, if you guys have issues when you're looking at the lethality drills, like that section, if you don't know what the drill is, all you got to do is ask me, what is this drill? And then I can show you. I'm going to obviously go ahead and put examples of each one. But again, we've talked about pretty much every single one of them over the years. I know that there's some new students here, though. So I'm going to probably have to make a video about it. It's very, very important, because there's never a day that you'll have nothing to do. If you sit there and think, oh, I have nothing to do today, you're lying to yourself, and you're, being lazy. And you could just simply ask me, like, I don't know what to do today. Can you give me something that can be helpful? And I'll give you a recommendation, right? Just know that there's something to do every single day, even if it's 15 minutes, 20 minutes, right? There's something to do. And I can't force you to study. That's one of the variables when you learn from somebody, whether you are going to put in the work or not, and that's something that definitely presents differences in progress when it comes to students. Some learn really quickly and some don't. Some study a lot and some don't. Some follow instructions, some don't. You know what I mean? So those variables are very important to recognize, and it's important for you to recognize where things are lacking and then go ahead and fix those things. Because if not, Doesn't matter who teaches you, right? It's going to be you that's in the way, right? And too many times this is the case, right? And that's, part of the statistics in trading, why so many people fail. It's because a lot of people can't get out of their own way. Let me see, Sean said, can you show us what all the time frames you have? So I have 15 second, 30 second, 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, 6 minute, all the way to 10 minute, then 15 minute, 30 minute, 1 hour, 2 hour, 4 hour, 8 hour, 16 hour, daily, 2 day, weekly, monthly, 3 month. Then again, I also have almost 7 years experience navigating multiple time frames. And me personally, the way that I do things, these time frames fits the way that I like to do things. You may not like the 2 hour chart. You may want to use the 3 hour chart, right? You may want to use the 7 hour chart. You may want to use the 90-minute chart, right? In all honesty, it's just like a preference. You do want to kind of mess around with each one to try to get familiar with which ones resonate with you, which ones have the clearest price delivery. That's another thing, right? Over the years, I've discovered which ones show up the clearest for me personally. I have students that use many different time frames, and some that don't even use half the ones that I use here, right? Some just use all the time frames below the 1 minute, 15 minute, 1 hour, 4 hour, and daily chart, and they don't have anything else, And I mean, there's a multitude of different ways to do it. No one time frame is better than another. It's really personal, right? Where do you see your model, and where are you able to navigate the different tactics the easiest? And again, it's a variable, but those are the time frames that I use. It's a lot of them. I'm not flipping through every single one of them all day. My main time frames are, 15, 5 minute, 3 minute, 1 minute, 30 second, 1 hour, 4 hour, and the daily. Right? Those are like my main daily time frames that I look at, just to kind of, get different perspective. And then also to verify, right? Like I just said a second ago, these are consecutive up candles, right? I want to be able to flip to another time frame and be able to see a defined PD array that lower time frame PD array that I'm observing fits inside of. Because when you can have these time frame alignments taking place, it adds effectiveness to the PD array that you are looking to engage, and whether it's a valid PD array or not. When you have multiple time frames, if you don't see what it is that you've outlined being supported by a time frame above, then that you may be marking it off incorrectly. It may just not be as sensitive or effective as you may be hoping. Let me see. I want to remember how they work so I know what I am seeing / what you're speaking. Yeah, so any up movement that then breaks down, right, with an up candle and then a displacement through it, that's a bearish order block, right? Just look at it that way. And when you go in and study, that's what you're looking for in the bearish sense. You want to focus on one side first. So do all bullishness for a week, all bearishness for a week, right? Same thing with fair value gaps. All bearish for a week, all bullish for a week, and get hundreds of examples of this. Because again, it can only be as effective as it can be when it comes to just watching me with 7 years experience outline stuff through experience. It's like, it goes back to the conversation of theory versus theory plus action, right? Theory itself is not going to work. Like me saying the last up candles before a down move, it may look nice on the chart, but then when you go in, because of how, because of the disconnect in experience and application, you're going to feel like you can't see it when I'm not pointing it out, because it's like a crutch. When in reality, you just got to go in and get hundreds of examples. Hundreds. I can't even count how many examples of market maker models, Power 3. I can't even tell you how many times I got it wrong. But the main factor is I went and did it. I put my hands on it. I was feeling everything, seeing when it worked, when it didn't work, continuously studying, reinforcing, asking questions, reaching out to people, sending my examples to people so they would be able to verify, those that have more experience than me that were willing to help me. And then eventually, it clicked, and I'm like, okay, this makes sense. And then you could see it. And because of the repetition, your reticular activating system jumps to those things on the chart because you've conditioned your mind to know that this specific thing is important. And you've done it wrong and you've done it right. So you can make that differentiation, right? But without doing it wrong, you're not going to know how to do it right, right? Because if it was, easy just to get everything right off a theory, then, it could be some turbulence, yes, that crutch. I mean, for new traders, it's good to have the crutch, obviously, but you don't want to depend on it so much that you're not going in and studying. Because if you don't study, right, like if you don't make that 15 to 30 minutes of time every single day to do it, I mean, it's going to take way longer than you would expect because the reticular activating system that you have is not being conditioned. It's just going off of someone that knows how to do it and that kind of just gives the answer rather than you going in and pushing yourself, and accepting doing it wrong. You have me to send examples to so I could verify. So you have all the resources that you need. So up candle followed by a displacement candle. Yeah, a displacement candle that in particular breaks the low and the open of that particular up candle. That's the sensitive behavior right there, up to the midpoint. Okay. And again, if you see consecutive candles like this, you want to move around in time frames, right? Consecutive candles, you want to move up in time frames because then you see that it shrinks it together. Just that alone, that study alone needs to have a lot of attention to it. It's the only way that it burns into your mind, right? Because, by now you've seen that, just seeing the theory and having me show it, right? It's great experience, right? I'm letting you borrow that experience. But if that's all that is focused on, and there's no back testing, no screenshots, no physically going into the chart and finding them on your own and sending them to me to verify, this goes for every student. It's not going to resonate how you expect it to resonate because you have to put your hands on it. You have to be okay doing it wrong, right? Let me see. Displacement, bearish condition. Yeah, condition the mind to see that and move on the bullish order block. Yeah, and then of course a bullish order block is the down candles prior to a displacement. So when it comes down into it, the open price should be respected. Okay. Same things right here, right? It dropped down, took stops. Right? Taking stops is just simply running down below a previous price structure. Now, which ones are the most significant obviously will come with time, right? We'll talk about that later. Just the theory right here is important so you can just go in and see it, right? And then just observe for very particular things. Okay. So last down candle prior to displacement higher. Last up candle prior to displacement lower. Preferably coupled with a stop run, right? Because then the other side's been triggered in and that order block was formed. The order block signifies what ICT calls a change in the state of delivery, changing from bullish to bearish or from bearish to bullish. Okay. And again, you want to get at least 20 examples of these per day, right? And those of you that have been live with me or did one-on-ones and whatnot, you guys have seen whenever I teach something and I go in there and show you, there's hundreds of them that you can pull out, right? And if you can't, that just tells you you have to do the act of back testing. You have to go in there and push yourself to do it. Even if you have 20 minutes, even if you have 10 minutes, you have to do it. You have to. There's no getting around it, right? There never will be. And you're going to want to do that for the rest of your life, until it's nauseating to do it. And you're like, I don't care. I don't have to do it. But even then, you should still do it, It's just like working out, right? If you work out hard for a couple years, get in the shape, and then you become a lazy ass, all that work you did is going to, kind of dole out. So it's the same thing with this skill set as well. So yeah, the overall idea of this continuing to drop and target this lows seeming to continue to unfold. We're in the macro, the first macro. I didn't call you fat. Didn't call you fat. You see, that would be an explanation I need to hear a few more times, but it is starting to make sense. Once I move on to order block, study past power 3. Yeah, exactly. Yeah, just remember what I just described for the down movement. You just flip it the other way. Instead of an up candle followed by displacement that closes through the open or just simply taps through the open, you get, for the bullish idea, it's reverse. So it's a down candle with a bullish displacement through it, right? And it's as simple as that, right? There's nothing more that needs to be concerned with. This is just the pattern recognition idea behind the concept. And you want to break down each concept in this way. First, I need to observe the pattern, not caring if it's right or wrong, right? Or if it works out or not. Then later on, as experience grows and you're able to spot them more, you're then able to start adding more context that allows for it to be a little bit more accurate. We can't go into concepts thinking, okay, I see the pattern, it should be perfect right away. And if it's not, I don't understand, right? That's not the perspective you want to have. You want to go in there, aim at doing it wrong. Because without doing it wrong, you're not going to know how to do it right. Right? That's just kind of the way it is with everything, right? Is it totally in the previous recording? Is that previous recording? Is all I care about currently? Yeah, things that we talked about the other day. So whenever I tell you guys stuff, whenever I give you something to study, if you guys are learning from me, you need to stay within what I'm telling you to study. Because if you go outside of it and everything's all over the place, that's the whole reason why you've come to me, is to keep you on the rails, to get you to focus in on certain things. So if you do your own thing and just start going outside of everything that I'm telling you, what's the point in even coming to me to teach you? You're trying to teach yourself, right? It'll be frustrating for you, frustrating for me, because you won't be making progress. And my goal is to give you progress. Your goal is to progress as well, right? So help me help you by you following the things that I tell you after we talk, right? That goes for everyone in the private group that I work with closely on a one-on-one basis. And any of you that are with me on a one-on-one basis that decided not to join the private group because you want to be one-on-one with me only, it's important for you as well. We spend a lot of time together, so you need to follow instruction. Okay. So just a little nudge, right? For those of you guys know who you are. Please follow what we talk about, because it's the best way to get you on the rails, and for me to clear up any of those holes that you have in your knowledge. Okay. It's very important. I want to help you probably just as much, if not more, than you want me to help you, right? Because I want to see you succeed. I wouldn't waste my time on social media. I could just be living my life doing whatever the hell I want to do privately, like I used to. But I want to help you. So help me help you. Okay? Because that's the goal. Okay? So yeah, with that out the way, I just wanted to mention that. So yeah, let me see. Did I miss any questions, you guys? See, I want to remember how they work. Okay. Good morning, Jen. Sorry if I didn't say good morning. Let me see. Okay, I didn't miss any questions. So yeah, hopefully everything's made sense. I've already laid out what I believe price is going to do. And again, it's up to you to determine which model you're going to use. Like I've said numerous times over the years, I'm not a financial advisor. I'm not here to put you in trades. I do give signals, but you have to work for the signal. Because if I just give you the answer all the time without making you think, right? I already give you a framework of where I think price is going to reach to. You have to have a model and decide when you're going to enter. Because if you just go off what I'm telling you, I'm basically giving you a signal service. And I'm not creating signal junkies. I want to create dynamic, lethal market assassins who can thrive on their own and know they could thrive on their own. And that doesn't come from me just tossing entries at you to do. You know, if I wanted to have that be the case, I would start a signal service, right? Which I'm never going to do because the mindset that comes with someone that wants signals only is not the audience that I'm reaching for. Unless you want to change that perspective and, you know, you've now woken up and think it's time for me to learn how to do this on my own and not be codependent as an adult, right? So that's my perspective on that. And for some of you that don't know, that's why I teach the way that I do. So you can see how everything outlined up to this point, the market maker sell model we looked at a second ago, the levels that I told you to watch that should be respected if it's going to go towards these equal lows here. You could see that all that stuff is valid, right? These equal lows are very obvious. This is another thing you want to use as a drill. You want to go in there and look at equal highs and lows and burn them into your mind. So anytime in the future when they are present in the chart, your mind just gravitates to it right away. You don't even got to think about it. You just look at the chart and be like, oh, there's equal lows there. There's equal lows here. That's a pretty damn beautiful move right there, if you ask me. Talked about this. If it's going to be bearish, it shouldn't even come up there. If you mix some of the things that I talked about with you guys in the private group yesterday, we talked about the order flow dynamics, how to read order flow. So if you didn't go back and study what was mentioned, or if maybe you didn't retain it, I encourage you to go watch that replay. Because again, the order flow dynamics that we talk about, I mean, there's second to none. Okay. We navigated price yesterday as well, going higher. Took it easy, but talked about a lot. So hopefully you could take some of the stuff from yesterday. You know, same with you guys on YouTube, right? All the stuff I talk about. Hopefully you can see in this chart a lot of the stuff that we discuss and how you could potentially have, you know, if you didn't have my rule of not trading aggressively during times when there's no news, but especially not during times close to FOMC or NFP or rate cuts. You know, you could have been tried to engage something in here. I did talk about this wick. I said when it comes into that, it should respect that, right? You also can add to it. I didn't mention it, but you can add to it this inversion fair value gap. Once it closed below it and you return back into it, should be looked at as an inversion. The closure below on this candle here confirmed that this was going to be an inversion. Okay, same thing with this little area in there. Price displaced through it, shifted market structure. If it would have came back into this fair value gap on this candle, right, leaving like a little gap, we have a stop run. We have consecutive down candles here from this 10-minute, which if you go to the upper time frame, creates a bearish order block in here, right? It's not exact from those consecutive up candles on the 10-minute, but it's close enough. We got our stutter candle with consecutive candles that gets displaced through. That's a change in state of delivery. You could look at the last up candle, right, as a change in state as well. But because these consecutive candles are there, obviously that's a little bit of a nuance when it comes to order blocks and changes in state. Maddie, do not concern yourself with this if I just confused you. Focus on what we just talked about and the drill that I'm going to have you go through. Everything comes with time, okay? But yeah, so now the expectation should be that this candle here should act as accumulation on the left side or sell-off or bullish order block on the left side. Broken through should now invert. We also have consolidation in here, so that's a balanced price range. when it rallied up and then gets down below it, equilibrium of this range here, from this high down to that low, should be sensitive. Okay. If this is going to be a dynamic price delivery down through to the sell side, which I believe it does have a likelihood of doing. We're below the open price too. You see the DO right there, that red line. So we got accumulation, manipulation above, SMT at the highs, previous day's high swept, distribution. Okay, so accumulation, manipulation, distribution. We're in a phase of rebalance. Okay, if this is going to go lower, again, this lower movement is counter trend. So it could fail. It could leave these lows available because the main objective on the higher time frame still has these equal highs up here and this rejection block we're reaching for. You also see that this was a previous day's high that got swept, and we've had a strong response off of that. Let me see. It's right there. Hopefully you guys have been able to follow along, by the way. Okay, let me see. Oh, pattern recognition. Okay. Are we having a retest on a breaker? The breaker's up here. Okay. If we move around, got a breaker right there. So it hasn't ran up into that yet. If you move up a little bit, right, you can see this low to that high is also a breaker. So if it breaks through and we are going to see heaviness, that would be a good sign that the highs may get left available for a little while. And then it may look to run down a little bit further, use this breaker to then get to this 4-hour FVG. But we'll see, right? We'll see what it wants to do in regards to that a little bit later. Okay. So in terms of a breaker, Servandamora? In terms of the breaker ideas, those are the ones that I'm observing. Can you go to the 15-minute and mark out the breaker? This high to that low, the down close candles, but in particular, this last down candle prior to the up move, right? That is the breaker right there. Whoops. Low, high, takes out buy side, displacement, closure below that low. So any return back into that should be looked at as a breaker in itself, along with a bearish order block that gets traded through like this. When it trades into it, should be treated as a balanced price range. When it comes to bodies or the wicks, it's totally up to you. It's just like a preference. One's not more effective than the other, at least from what I've been able to gather over the last, 7 years. So it's really just a preference. ICT also says it's really just a preference. So I think we'll just stick to that perspective. So you can pick. I personally, if you want to hear like what I like to do, I kind of bounce around from the wicks to the bodies. If it's too small of a body, I like to get that full range. But I do keep tabs on the body midpoint, right? So, because if any of that gets taken out and it just rapidly increases and breaks the midpoint of this, right? These consecutive down candles, because this is the full range, right? But when we're looking at a PD array, like we talked about yesterday in the private group, you guys, you want to pay attention to that lower 25, lower 50% of the range, okay, of that PD array you're looking at. Because if you can get closures around that lower portion and it displaces away, you have nothing to fear about that PD array being violated. It's not going to be violated. It's promoting to you, communicating to you that it is absolutely sensitive and you are absolutely on the right side of the market, as absolute as you could be, especially if you're in line with the higher time frame narrative. Okay. Let me see. Jen said the breaker and analysis on them has been a game changer. I'm happy to hear you say that, Jen. Breaker was like the first model that I ever used, so I could say I know a thing about about breakers. It was definitely the one thing that changed everything. Because again, you have turtle soup ability, so you can catch the high up here if you believe there's a PD array like this daily order block up here that has triggered in this response. If you can get that mixture with an S&T and then press breaking down, you have one level. Once it changes state of delivery, you can execute on when it returns into it, expecting that this is going to be taken out because something like this is going to be targeted, and you want to make sure it's in the right time, right? So that's one idea you can take. A secondary idea is the actual breaker in here. Well, the secondary idea is an inversion fair value gap that's inside the breaker range. So if you find an inversion fair value gap in here and you trust the breaker and you're in line with the narrative going lower, any return into that inversion that's in there can be also classified as an inversion inside of a breaker as you expect the breaker to be targeted. Okay, so that's two. A third one is the normal execution there. And then the fourth one, if your breaker is in fact unfolding, will then be the secondary continuation going into that first retracement that triggers this move. Because again, this low, high, creating a lower low should leave a bearish order block. A bearish order block is a balanced price range. Maybe it sets up a baby breaker in here on like the 1 minute chart inside this 15-minute chart, right? You could then try to execute on that as well. Same thing in here as well. That could be a mini breaker in this 15-minute retracement when you drop down to the 1 minute, right? There may be a breaker inside of this high. But again, and then once this is taken out, you think the same thing. Buy side, sell side. We have a BPR here and an order block, displacement. BPR here, order block, displacement. So when it trades into it, until it violates this idea by doing maybe something like this, you know, you'll continue to anticipate the price should end up continuing to then go lower. So this, what I just described here, is why the breakers were the first thing that I used and why I still use them to this day more than any other model that I have. Aside from the Razor model, which is a model I kind of identified myself using an order block, inversion fair value gaps, stop run, and a double change in state of delivery at a higher time frame level. Is the breaker invalid once? Wait, is the breaker invalid once there is a candle close above? So the breaker, in my opinion, is invalidated once it breaks through the midpoint on a closing basis, specifically of the breaker candle area or the breaker consecutive candles before the up move. If it breaks that midpoint in there and displaces above, that's a first sign that it's probably going to give it up. But once it takes out the breaker candle area, right, like the consecutive candles in here, once it closes above that, that now is going to be a level that gets inverted to go the other way. So I would say that whatever you map out as the full breaker range, right, in this case, it's these consecutive candles. Once it gets above that breaker and closes above that level, that's when I tell you that it's invalid. We've actually identified this multiple times, even recently. If we were to go back to this higher time frame in here, those of you that have been with me for a while and watched the analysis that we've talked about, we actually identified this exact concept. I said this, once it gets below, it should act as a breaker. And it did act as a breaker up until it took the lows, hit the weekly fair value gap, and then broke above, closing above this level. And then from that point on, it was off to the races. On the daily time frame, you called it Sunday. Exactly. See, this is the benefit for those of you that hang out. You see the stuff that we talk about unfold before your very eyes. It's different than watching, very inconsistently, here and there. But, those of you in my private group, you guys have a bit of an advantage because you get to see me outline and talk about things every single day repetitively, so you never forget. But yeah, on Sunday, I do talk about a lot. I talk about the invalidation points, and this was one of them. And we talked about if it breaks above that and it inverts this fair value gap, then we're off to the races targeting the highs. And pretty much everything that we said to look for has unfolded. right? But again, going back to your question, Sean, once the breaker forms and then is violated above that breaker candle area or breaker consecutive candles, once it closes above that, that's when you start to think the other way. And then many times when that happens, you'll have a different breaker going the other way, or you'll have an inversion fair value gap. Okay, because if the initial breaker formed, it should have displacement like this, right? So then if it violates this plus, say, an inversion fair value gap that was being used to frame that initial breaker, you know, once it breaks above that, then you can then switch. Yeah, 100%. It should be used as an inversion. And if it inverts and is used as an inversion, that is a real style of support and resistance. Same thing with any inverted PD array that we see in price. But yeah, to keep it in layman's terms, you could look at it that way, Sean. There's nothing wrong with that. Yeah, give me 1 second. I'm going to go run to the bathroom real quick, and I will be right back. Give me 1 second. Okay, I'm back. Okay, so another thing that we want to keep tabs on, by the way, ahead of the open right now, we have this regular trading hours gap right here. That is massive in efficiency. June 15th. So that could be a massive draw for price, which is still inside of the higher time frame accumulation area. It could reach into that. So I'm more so looking to see if we can take these lows out first. We'll see what can happen going into the open. Again, we got that wick right there. So until, you know, we really start to ramp up, right? I'd say until we invert this level in here, I think that the likelihood of this going down to target these equal lows here is pretty likely, especially with dollar having somewhat of a, you know, upside short-term run a little bit. So I would not be very surprised if we get this to tank aggressively, honestly. So that's going to be the main focus here. So think about it. We're on the 15-minute chart. Price is retracing into a level on the 15-minute chart that may be sensitive. So now that we have that cornered in that piece of price delivery, when you drop down to the 5-minute chart, if you could find your model in there, we're at the open price as well. At or above the open price is where the best shorts will come from if it goes short to target these lows. So now that we have all that framed out, from higher time frame potential retracement to 15-minute retracement, market maker sell model, price is now retracing into the open price right at 6:30. We're hanging out at midnight open with relative equal lows down here. With all that on the back end, when you now drop down to the 5-minute or the 1-minute and then spot your model in there, you have so much going for you to then trust this as a move that could be reliable to go lower. You see how that's different than just finding a model on the 1-minute chart with none of that context? Right? This is where high probability lives. Right? Is having a reasonable amount of confluence. So yeah, watch price right there. You notice how it's rejecting this? Right? That is that area of accumulation. Whoo, look how beautiful that was. Sheesh. Amazing. It's like magic. Tap the low of that wick. And like magic. Again, it's too close to the open, so it's a trade that we called out. We knew it was happening. I'm not touching it. And I'm totally fine with that. And you should be too. Okay. So yeah, we'll see what happens here. Got this breaker. I know there's a lot of stuff on the chart, but again, many of you guys are learning. So I want you to see what's on the chart. These red boxes, those are new day opening gaps. This little pink line in here, I'm not sure if you could see that. This little box in here from this level. Let me actually outline it. From this level to this level. That is the first presented fair value gap from the 10-minute perspective on some other day previously. Actually make this a little smaller. Doesn't have to be so bold. I mean, it's already reacted, so we'll kind of move that. So we got low, high, lower low. So it created a market maker sell model in there, targeting the equal lows. We got a wick, and now we're racing to our level, like we said it would. Completing the market maker sell model we called well up here. We got a regular trading hours gap in here, a little baby one. I guess it's not a baby one, right? It's reasonably sized. So when it comes to the 4-hour, again, we have a level down there that looks reasonable. This is a daily inversion fair value gap. We got the dollar declining, so that makes me feel like this is just going to be a liquidation. If dollar keeps ramping lower like this, remember, our narrative is still trying to see if something can form to go bullish at some point. At the moment, there's nothing telling us it's time, though. So what do you have to do? You either don't do anything and wait, or you consider some of the things that we've talked about that kind of builds a framework and narrative for you to trade counter trend if that's something you eventually feel confident in doing based on the overall concepts, right? Again, welcome to anyone that's on the call that hasn't been here before. I think you'll get a lot of value if you stick around. But like Jen just kind of pointed out, I talk about things day to day, and you have to be here to see it work out. Sometimes things are not going to play like the full context in one day. Sometimes it takes a couple of days for it to unfold. So, you know, you got to consistently be here. You'll still get value if you pop in and out like Netflix, but you know, there's really powerful stuff being talked about here, and you have to be here to watch it, right? Watch it get set up and then watch it unfold over time. And that's where the true value comes. So again, we haven't tagged this low yet, so it's not quite done yet. So that right there in itself, we got a bearish order block, right? And it's reacting towards this 4-hour fair value gap in there. And the full target for the sell side, we can just say now has been tagged. So now that liquidity has been purged from London, no, a little bit from Asia actually. Let me see. One thing you guys want to look at right here, we have, is that Asia? Let me see. Low, higher. Yeah, so that's Asia's projection, accumulation, manipulation, distribution. Like I literally said, rebalance, right? Accumulation, manipulation, distribution. And then we have a larger one, accumulation, manipulation to the Asia standard, 1 standard deviation. So you take Asia's range, you just like duplicate that range up, you know, once or twice. And that basically picks the top many, many times. If it's bearish. Okay, and you can see that beautifully worked out flawlessly. And now we're just racing lower, right? So again, now that we tagged the lows here, that's counterparty liquidity if we are going to continue to be bullish. So we'll see how this responds. That's aggressive, right? This is why I don't look to chase price around 630. This is a beautiful testament to that. Could you still have been able to engage and make, you know, something happen during this run? Of course. Right, we framed out this as a sell model, aiming for these equal lows well up here, right? The breaker as an anchor to get us down into that. Okay, I even talked about in the higher time frame, dropping lower would be something ideal to then see it go higher so they can trigger counterparty. Like we've had this whole objective and this move that's taken place seen before it's even manifested, right? We saw that, we saw the future essentially, right? And of course we have our areas down here if I wanted to get more excited, but you know, the more shallow it can be, the better. Because then we know that it's going to have really aggressive move, a really aggressive move to the buy side. Okay. We have a high, low. If we create a higher high, after we took liquidity here, not just any old liquidity, we got multiple sessions of liquidity being swept in there. So London's lows and Asia's lows together. And you notice how they just tagged it, right? They didn't close below it. They tagged it slightly and then rallied up aggressively. So I want to see what this turns into. If we can get price to move a little bit stronger and get beyond that, we have relative equal highs up here. We do have this stop run in here. But again, when you zoom out, right, this is now a failure swing from that larger perspective, right? And as long as this fair value gap stays intact, preferably as long as this accumulation can stay intact, we will continue to see this thing get real excited to the buy side. Crap, I didn't mean to have it all attached to there. Now it's all messy. I didn't mean to have that showing on everything like that. I hate when I do that. Got to have it time frame specific. So yeah, now we're getting changes in state. Okay, once it breaks this high, this will now be a bullish breaker. If you move up to the 5-minute, right, or let's see, as we go up, we got a wick. We got 2 order blocks in here. So we'll see what happens. It'll go lower more confidently for this 4-hour fair value gap if we can close below this wick midpoint. That'll be the moment in time where I'm like, okay, well, it's time to catch a continuation and kind of put buys on the back burner. Right, so We'll kind of see what happens here. But yeah, coming off that low, go to the 1 minute chart, we could see order block, displacement, return into that order block, relative equal highs up here. Because time is not in alignment, again, there's no move for me to even observe. Okay. Well, to engage, we can observe, obviously. But we called this one, said that should go down below the low, target that. Very easy. Now we have SMT at the lows. So again, if we break this high up here, that'll be more convincing. We have an order block, change in state, a secondary order block. If we can get a change in state there, that'll be a double change in state, plus a stop run, plus SMT, plus higher time frame, potential for buy side. And then we got the double change in state, right? And then getting above that creates this high to that low as a bullish breaker. Take these up candles in here, drag it over. And then you'd have to observe that looking to go higher again. This for now is just a retracement into the lows over here. So again, there is a risk of it wanting to go deeper into this. That's the reason why, this is the reason why I want to wait. If I'm looking to buy, I want to wait and see, can we respond off this low and then get deeper if I'm going to consider taking the buy side again. Otherwise, it may not be done trying to go lower. So let's see what it wants to do in here as we get closer to the macro, right? We'll be able to make a solid decision on whether there's something to do or not. Yeah, this right here is not highly indicative that it wants to keep going. Now, if this is a failure swing that breaks this high, this is going to be attacked pretty aggressively. Because again, sell side, buy side, if this gets traded above this plus the stop run, should be a good condition for a balanced price range that could be reliable, at least for a small move up. And if it gets deeper into that, again, we got order block here. We got accumulation here as well, order block. So this getting up beyond those levels, once it tags those, when it returns into them, they should have an inverse nature to them. And then that could be a stair climb or a rock climber, right? Grabbing onto that gripping point, grabbing onto that gripping point as it looks to hit terminus for the buy model. So you will see if it gets up there, sell model to target sell side, to then buy model to target buy side, amplifying the fact that we are always in a market maker buy or sell model, like I talk about a lot. And ICT has talked about before. Okay, so we got our first presented for value gap in here. You see how it respected that? Now that we're above this, this becomes a mitigation block. So it should respect that. If it gets through it, it's going to go lower, right? But this right here is a mitigation block, type 2 dealing range. That should rocket through to the equal highs up here. Again, we got the midpoint of the regular trading hours gap. This is inefficient to the buy side for this regular trading hours in here. Again, time is not quite in alignment with this stuff right now. We still have 3 more minutes. So I am going to allow this to pass as well. Does that mean you have to allow it to pass? No, not necessarily. But again, it's up to you. Do you trade mitigation blocks? Are you familiar with these things? If not, you shouldn't even be trying to take a trade at all. See, Sean said first presented for value gap on the 1 minute. Yeah, down here. We could see that it traded through and then got above, respecting the order block. That right there that I just called out right there, if you were willing, right? There's 20 to 30 points offered right there from that mitigation block idea. Now we got high, low, higher, high, bullish breaker. So again, the run up in here, midpoint, should not be closed below. We also have the mitigation block. We also have an order block and an order block all in one place. So this whole lower level, if it's going to be trusted to go up, should not come down and meet some of this. If it displaces and closes below the midpoint of that, the 4-hour fair value gap down there might get targeted. But for now, let's see if this can hold and try to push us up at least to close in the rest of the regular trading hours gap. Again, because it's a day before FOMC, they may try to pump fake, try to build liquidity and sentiment above these highs in anticipation for tomorrow, so then they can just shoot it up aggressively using the news event for the higher time frame macro delivery. Okay, so yeah, let's watch this in here. We're not quite at the macro yet. We have 1 more minute. So I'm going to continue to wait, right? So this is going to have to close above the upper portion of this up candle here, which is the mitigation block level. I guess is that one a little bit higher? Can't tell. No, it's that one. This has a wick, but I'm not concerned with the wick. I'm concerned with the body. So yeah, there's that. If this candle can be traded above, that's a change in state of delivery. And this will be a retracement supporting the mitigation block to continuation. This red box is a new day opening gap. We don't want to see that getting traded into and then respected to the downside. We want to see it trade into it, respect the upper 50%, and then go. Or if it trades through both sides, it immediately needs to get above it. Again, this high to that low should act as a breaker. It should act as a bullish balanced price range. So we should not see any characteristic trading beyond the midpoint, preferably doesn't spend a lot of time below the upper 75% in terms of management of what's happening right now. So yeah, one thing to consider too, if this does blow this out, what your perspective would have to be is look at this low. That's a rejection block there. Okay, but it's also low, high, lower low, bearish breaker. If this was to fail and go down into that, that would be the next potential idea to then target the 4-hour PD array. But right now, nothing's changed, right? It hasn't closed below, hasn't upset the move. So it's just continuing to go up, right? So now that we changed state of delivery again up there. Where is that? It's the breaker. So again, I'm just sitting here waiting. You know, could a move have been taken right there? Sure. To go higher off the mitigation block? Sure. We're now in the macro. So that was right at the start of it, the 45 macro. We do have an indecision type of day, so it's more low probability, higher risk, right? It hasn't fully committed to one side as we've went into New York session. Again, that change in state of delivery, right? Those of you that know about changes in state or order blocks, right? When it trades into that, it should respect it and keep going if it's bullish. And until that's proven otherwise, that's the idea that you hold on to. So you could see that that worked out. This mitigation block, the breaker, right? If you trusted that, we went into the macro, right? There's nothing really going against this potential buy position, or the change in state when price trades into that. There's nothing going against that either. I did lay both of those things out ahead of time and told you guys if it's bullish, it's going to hold those levels. We haven't said it's going to be bearish. So, you know, read between the lines, right? So yeah, now we got this wick here, right? So preferably this candle closes above the 50%. It could wick through it, that's fine. So that mitigation block was beautiful, huh? So we're coming back to this bearish breaker here. So yeah, we've closed in and filled and balanced this regular trading hours gap pretty efficiently. You see the low here, buy side, sell side, buy side, sell side, filling in all that lower portion. Now we have buy side to the top, sell side one more time into a bullish order block. That regular trading hours gap, once it breaks out of it, is now balanced. So it's not going to need to come back once it leaves it. Okay, so now we're moving up through these levels in here. Okay, we do got that bearish breaker. Do like this fair value gap there as well. Is it inversion? That right there is an accumulation level for the market maker buy model. Now that we're above it, once it closes above it, when it comes down into it, if it chooses to do so, it should act very sensitive if it is going to go higher. Again, because we're ahead of FOMC, there's nothing guaranteeing that this is going to shoot up or shoot down. We could just do this all day because it's a day before NFP, FOMC, you know, a Fed speech, a rate announcement, or whatever news event is happening that we're a day before. You know, it could present you with that risk. That's why you got to be cautious and not aggressive if you're looking to be professional, right? Because the gambler, the trader that is lacking in experience, thinks that every single day you got to put your foot to the pedal. And that's why they blow their accounts every single week. You know, they have no limit. They have no way of analyzing whether something is worth pushing or pulling back on, or just not touching at all. And that's a difference when you come here. You know, I put on full display, you know, patience and not pushing aggressively and just waiting, right? So I like this candle, like I mentioned earlier. If it gets above it, if it could reach into that and then support it, we should be able to get second stage distribution from this little area in there. Again, this accumulation I just outlined, and I literally said, as it printed, when it comes down into it, it needs to respect it as support and then shoot up. And we could see that that's in fact happening. So from the mitigation block, well, from the call of the market maker sell model targeting the Asia/London lows, right? And all the ideas that we talked about in that, everything worked out in regards to that. Then once it tagged that low, right, I said we have to watch. Once the mitigation block formed, I called it out. I talked about the bullish breaker, okay? Both of which have been respected and offered an opportunity to participate in this run higher, right? Then we have this order block that was created. It ran up. I said that once it breaks that, when it comes down, it should hold it if it's bullish. Not once have I called the bearish trade setup. So it's been all running to the buy side, at least beyond the stop run here, okay? In the sell side of the curve, obviously, we talked about shorts, right? We talked about getting down there. But in this case, there's not one time that we've talked about this is going to go short, right? It's been mitigation block to breaker to order block to return to the order block. Even the wick in there, I said we need to watch that wick. It needs to close above the midpoint. Did it do that? Absolutely did. Now that we got above this regular trading hours gap, like I said, we have buy side, sell side, buy side, sell side. Every piece is balanced. So it has really no reason to have to go lower unless it's going to break through it and then try to target some of the deeper sell side liquidity. So we'll see how that unfolds. From this mitigation block here, given that it didn't close, like we were watching, and then it immediately ran up, changing state of delivery here, that offered an opportunity. Never invalidated the move either. I said if it broke through that and closed and targeted this low, once it gets below that low, that would have turned to a bearish breaker. But it never did that. So what has been the overall perspective? Higher time frame, daily chart is bullish. Our underlying sentiment is trying to see if buys can unfold at some point, and when they do, look for opportunity to participate. Okay. Again, there's been multiple areas in this price delivery where you could have taken an execution or considered it. Okay, but again, the timing element's off, so I've been waiting. This one, we could look at that as a missed opportunity on my end, because it did happen right at 646. Didn't close, right? So that initial run, but then this one for sure, when it came down into it, believe that offered 30 points. Yeah, 32 points. That's all you're looking for today, right? And any day where we have all these news events taking place, you're not in here trying to swing for the fences, right? It's just not worth it. One thing I can say too, if this was to turn into a decline aggressively, and then we were to get back down below this first presented fair value gap, once it displaces through it, and if it can return into that, that is another really, really easy idea to get to participate in. See, if we go to the 30-second chart, we have a low taken. We have an order block there. So we'll see if that can hold. Bullishness is clearly underway, at least for the time being. It's kind of been that way. On the 5-minute chart, we actually have a pretty large wick in there. So this is going to keep going up unless it breaks down, invalidates this breaker. We have a market maker buy model, right? This is setting up characteristics that we talked about. It's not respecting the breaker in here in a very sensitive way. We got that inversion fair value gap right here. If it can trade through it and close above it, once it returns into it, should act as another gripping point for it to continue reaching for the buy side. Okay, let's see how that's treated. I'm very curious to see, are they going to try to get up there and not leave that for FOMC? That's one thing that has me a bit concerned, because they can easily look to still smash it lower to simply just give the pump fake, right? This is very high resistance delivery going into this range. How do you know? Because it's very, very deep retracements. You know, overall, it's still respecting the run up, but at the same time, it still has that risk because of FOMC tomorrow and the rate cuts. The rate cuts, if it does come out as a cut, it's a bullish idea, because when it cuts rates, that means yields drop, bonds rally. When the yields drop and bonds rally, dollar declines, indices fly, creating all-time highs, which has been the case the last 24 rate cuts, which is a crazy statistic, right? But if you go back and look at it, you'll see that it's the truth. I pulled that study up last year. Okay, so yeah, this is what I was concerned about, right? Just kept me on the sideline. So let's see what this is going to turn into. Again, we balanced out this overall regular trading hours gap. We got that little accumulation. If it was going to hold the market maker buy model accumulation phase and then distribute from those levels, we do not like this. That is a red flag for bullishness. We have a low, high, lower low. So we should go to the 15-minute chart. Looks like it's a retracement into the breaker. So again, we're back in the middle of the range too. So again, very, very risky moment to be in either direction. But let's see how this is treated in here. If this returns into that and then displaces aggressively below that, our view has to then adjust to the lows right there. Is there anything else that aligns with that? No, it's just that order block. Okay, we took stops up here. Decline getting below the open price. So we got accumulation, manipulation, distribution. On this 15-minute chart, should see rebalance if it's going to go lower, and then redistribution. targeting the lows down here, this low in particular, and maybe even this regular trading hours gap high. Again, I don't like how this looks. The behavior is just not comfortable. Obviously, there's nothing wrong with what we pointed out earlier. But up to this point, now that we're in the macro and all that, we have to be very cautious in here because it's really jerky back and forth. If you took a trade off something in here, which again, it's not the intention for you to copy everything. I'm not a financial advisor. But if you did and you made money, I would encourage you to take that and, accept that, not go back in for more. You want to practice getting it and getting out. So yeah, we have a low, high, lower low. That's a order block. Like I said, if it quickly blasts through that, it's most likely going to look to target the lows down here. So yeah, that's what I will be keeping my attention on. If we could return back into this, we are blowing through that. So it may just use the low of the regular trading hours gap in here. We got that first presented fair value gap in this level. So yeah, that's interesting. So we got a wick in here. We don't expect to see the upper portion of that fair value gap traded to if it is going to go lower. Very choppy range in here. See if we can get a follow through at some point. Yeah, very sensitive in there. Watch this first presented fair value gap. We got a breaker right there. Low, high, lower, low. Accumulation, manipulation, distribution, rebalance, redistribution. So now we should get another rebalance and redistribution again if it is going to go lower. So yeah, we'll see what happens. Dollar's weakness definitely makes this sell-off a little iffy. They could very well just sweep the lows in there, come back up, and hang around, like I said. So I'm not going to touch this. I'm just going to be in an observation mode. Yeah, let's see what happens. If it's going to be bearish, this wick should be respected. This lower quadrant of the regular trading hours gap should hold. This wick shouldn't really get traded into. That order block shouldn't be tagged, right? It should be able to stay below this as a market maker sell model, a small one. But again, we already took stops down here. The only thing that would be really logically reached for is that low and the fair value gap down there. But again, we got a lot of trading in there. So yeah, very wicky, pretty nasty in there. Yeah, the other two indices are moving higher in here. It's going to make this have a hard time trying to go lower. So I don't trust the shorts. We'll see though, right? Even though I don't trust it, doesn't mean it won't work out. Doesn't mean it will work out. I just don't trust how it looks right now. So I will hold off. But again, if it does go lower, you simply just aim for that low. And it will be because this turned into a market maker sell model. The lower portion of this regular trading hours gap will have then gotten respected. This wick with displacement was treated as a BPR. Buy side was simply just to retrace, take out early sellers to then try to tank it lower, most likely targeting this low or that 4-hour fair value gap that I pointed out. So see, very, very reluctant, very slow. Very jerky. Yeah, high resistance, exactly. Avinity, exactly. Hey, can you please tell me what I'm looking for? We're not looking for really much of anything. Price is basically sideways. So, I mean, there's way too much for me to really go into and describe about the entire perspective, but we've already taken London low. And now it's retracing. It's either going to respect and go lower, or it's going to blast through it and then try to attempt to go higher again. Because there's a likelihood or characteristic of either direction taking place, and it's really jerky. It's not really moving anywhere right now. I'm not going to touch this. We've already talked about a lot this morning, pointed out many things from this level going higher, the mitigation block, the order block, talked about bullishness, talked about bearishness, talked about market maker models. And we talked, there's so much. It's hard for me to just go back and encapsulate it in like one sentence. But overall, there's nothing to look at this moment, simply because it's very jerky. It's not going anywhere. Look at what it's doing. Up and down, up and down. It's going to have to break out and prove it wants to go one way or the other. If it breaks this low and gets below this fair value gap in there, like I talked about earlier, it wouldn't be unreasonable to catch a retracement into that and then target the lows down here. We have accumulation. We may see this end up being manipulation, distribution if it wants to go down there. So little power 3 could be unfolding in here. Got accumulation in here, manipulation if it does go lower, and this will be the distribution. But again, it's very reluctant to go either direction. Just think, if you were in a trade or if you took a trade, how do you feel? You feel stuck in the mud, right? You feel like it doesn't want to move. That's because we're ahead of FOMC rate cuts. So they're waiting for that big move to take place till tomorrow, because again, the news events, if a higher time frame framework is going to deliver, the news events are used similar to how macros are used on the lower time frame, but the news events are macros for the higher time frame. Okay? And that's a perspective nobody shares with you, right? Nobody has that perspective, right? It's a highly effective way to think about the news events, though. But yeah, for those that may be new, when I go live here on YouTube, I'm live generally around 5 a.m. Pacific Standard Time. So just keep that marked off so you don't, miss. If you do want to be a part of the calls, that is the schedule, right? Or that's when you want to start looking for the schedule, right? For me to send out links and go live. See, ES is flying. Yeah, they're kind of moving. They're reluctant to do much either, right? Like as well. All three of them are just not really trying to do much. The Dow looks more so like it just retraced to then try to go up. Again, we are inside of a bullish trend. Taking a short is high resistance just by default because it's counter trend move. Okay, so that's why it's having such a reluctance to go lower. We're not overall bearish yet, right? And there's a lot of bullish news that's come out interested in pushing price to new all-time highs. So yeah, it's a very, very, very reluctant to want to do much. So again, I'm not interested in touching this whatsoever. It's gonna have to give me a displacement of some kind. It's nasty. Do you really want to be a part of something like this? Do you have to find a setup in this disgusting back and forth? You'd be stopped out no matter where you entered, no matter what model you used, unless you took the buys that we talked about earlier and then ran it up 20 to 30 points and then got out, right? Otherwise, it's shaking people out. It's stalling. And so you guys have any questions? See what it wants to do with this. That's that previous accumulation we mapped out for the buy model. It looks like it's reclaiming it, but we'll see what happens here. See, did I miss anything? Didn't miss any questions. Yeah, so if you guys got questions, let me know. Remember, that's like the key about this community. I'm here to answer any questions, any difficulties you guys have. I'm not very concerned about like any entries right now. It's just disgusting. It's really gross. It's not, I trade with real money, and I'm very particular with what I want to put money behind. And I'm not just going to take a trade just because I need to take a trade. Like, it doesn't even make any sense. Like, I'm at the chart, I have to push the button. No, you have to find your entry. You have to trade in conditions that are high probability so you can make money, right? Not just to take a trade to take a trade. We have very well-defined things that we look for as well. So it was well-defined earlier. It did offer some movement, right? Some things that we talked about that could have been taken, we could have taken part in, but rules are rules. You either have them and follow them or you don't. Just like you're either profitable or you're not, right? It's the same thing. And having rules and following them gives you a much, much better chance to actually be able to manifest whatever it is that you're trying to do. But yeah, you see the lack of follow through for either perspective, right? We have a low, high. If it breaks down, creates a lower low, and it slides on through this first presented fair value gap, that would be, in my opinion, the best case scenario for the anticipation of this low being taken. We do have SMT that this low came off of, which led to the rally. We talked about that earlier. I kind of justified this mitigation block going up, but the mitigation block, again, we can classify that as a potentially missed opportunity because it was right at the macro. Just didn't notice, right? I didn't notice it was 2 minutes into the macro already. Well, 1 minute. And then when I looked at it, it already moved. So that is one missed opportunity there. We did talk about how when it ran up into that, it was going to go lower. That's outside the rules in terms of the timing. Before the open, too close to the open. And then now that the macro kicked in, we rallied up, right? And then it offered a decline in here at the breaker right there within the macro. And now it came down, swept these people out. If it wants to use this to go through to the buy side, I'd like to see us get beyond this again. And then we could use this high to that low, map out these consecutive up candles as our bullish breaker to then try to, excuse me, to then try to take this out. Okay. So that's kind of my opinion right now. I really pray to God that you did not blow your account in this nasty delivery when I'm telling you guys not to touch it. I really hope so. Because again, if you do, and again, you don't follow rules and you're going to keep allowing yourself to do this to yourself, that first and foremost needs to be dealt with rather than what's the next concept? Teach me a model. Tell me when to buy and sell, right? First and foremost, you need to stop the damage by placing rules around it. And people don't like to hear that. But, you know, are you trying to learn or are you trying to do whatever you want to do, right? Because there's a right way and wrong way to do this stuff. And pushing aggressively, demanding a trade setup, demanding that you make money in something like this, I mean, the market tells you over and over and over again, if you let it, that's not the right perspective. Okay. Again, that doesn't take away from the fact that this was a good opportunity in here. It was much smoother, much more pronounced inside here. So we'll see with this. We need this to break this low and get below this first presented for value gap, return into it before I start to think about a move. Let me see. Here you're speaking directly to me. I mean, it's just like a generalized thing, you know what I mean? It's a very common issue that people have early on. It's just strictly us getting in our own way, right? And that first and foremost is always for everybody, because you need to stop blowing your account. If it requires you to move completely away from touching a demo, especially a funded account, then so be it. Because pushing aggressively to try to break through the wall of prop firm trading and trying to be consistent without fixing these other things that lead to consistency that are more important than executing and, you know, pushing the button. Without those things, you're just throwing good money after bad, and you're damaging yourself. You're making it so you don't trust yourself. Yeah, that's another thing, Alvinity. If you remember, we talked about that the other day too. We're in a contract rollover. Okay. Oh yeah, that reminds me. Whoops. I almost forgot. Let me double check. We might not even be supposed to be on that. Yep. Okay. Well, we are now, it's now time to shift over. Totally forgot. You know, it can't be perfect all the time, right? Shoot. Where'd it go? September. It's time to roll over to the September contract. Quarter three. We're officially in quarter three. We have a cracking correlation too. That right there tells me I'm just not willing to get in. The short ideas look like they're unfolding. Things that we just outlined. Talked about when it gets below that first presented, right? It should be able to drop. Let me hurry up and get this real quick. Okay. Sorry, y'all. I totally forgot to go ahead and go do this before we hopped on. These contract months have expired. So now it's time to start fresh. Okay. I mean, not much really is different. You know what I mean? Look at that right there. Look at that beautiful return into that. That should lead us to a decline. Let me see. Oh. Nasdaq. Don't gotta change those. Yeah, that's it. All right, so let's get our markups back on the chart. That'd be nice, right? That 4-hour fair value gap looks nicer and nicer. Refresh on my pages. Yeah, look at that. Oh, look at that beautiful move. Look at that. I would have engaged that. I probably could have just engaged it as I was flipping through the different things. That's going to push us down below the low right there. Just like I outlined. I told you guys to watch this. And so if you were not watching it, like I told you to, right, then you probably missed the trade setup. I missed this one, so you don't got to feel bad. And I was just flipping through the things. Like I had the chance to engage that, but wanted to make sure I flipped through stuff. But look at how beautiful that was. Cleanest trade setup, aside from the mitigation block. But look at that beautiful move. See what happens with patience? You could just wait, right? You could just wait. You don't have to be so aggressive, okay? You don't need to demand trade setups every 5 minutes, right? From yourself or from anyone else. Because it's like, you just be patient, listen to the things that I'm telling you to look at, and you should be able to arrive at a point where you know where to execute, right? Or at least where a good opportunity potentially could be. Because again, I'm not here to put you in trades. But that was pretty damn beautiful if you ask me. It's what, over 100 points right there? Well, almost. Now you got low, high, lower low, breaker. I talked about that earlier as well. When you go to the 15-minute chart. Wait, not the 15-minute. It's a 5-minute. Right? Low, high, lower low. Right? Broke down. Large wick. Displacement. Should be sensitive at that low as we look to target that 4 hour. Again, it may not get down to this 4 hour because there's other things kind of resting here. That's the market maker buy model accumulation level. So all it really needs to do is simply take out the low like it did and then aggressively look to reprice because they've already pulled in stops right here. Maybe they want to get more excited and dig it down a little deeper, which would get us down into the gap right here. But I don't see it going any further than that. I don't think it'll come down into these unless it's going to have like a much, much larger pronounced decline for whatever reason. I can see if it does break through to that fair value gap. If it does want to go lower, we have failure swing in here, trendline liquidity. And then we have the regular trading hours gap that might magnetize as well. But it really just depends on how aggressive they're trying to get up here. Right? Them taking it down like this is going to get people thinking, oh, it's going to be bearish going into tomorrow. That's what they want, right? They want you to get away completely from the buy position so they can liquidate you and then go the other way. But obviously they're in that mode right now of liquidation. And again, how could you have engaged that? Well, I literally just told you guys real time in the moment from that first presented fair value gap. Beautiful trade setup. And then I just pointed out this breaker here. If you missed that one, you could have got that one. Right? We're outside the macro, obviously. But that right there in itself already offered 50 points there as well. Right? I'd say this is a very powerful session that we've done. We've talked about and showcased navigating a slower market, a more tricky market, a market where I'm probably going to get 500 messages today saying I blew my account and I don't know what to do, which is fine. I encourage you guys to hit me up when you guys are doing these things. But again, the expectation is that you're going to listen, okay? Because clearly we know what we're talking about, right? Yet again, the moves that I called today, from the mitigation block, from this movement up that targeted London's low, to me not wanting to take a trade in here, right? And then me outlining this while we were up here and saying that if it gets through it and comes back into it, it should react and go lower and target even deeper sell side, potentially the 4 hour fair value gap. All this stuff was laid out for you. And the two trade setups that I did mention, or the scenarios that I mentioned, both have worked out, right? I talked about the buys. For me personally, I wanted to see us get up a little bit further. Never really got that, right? So we do have the power 3, right? Accumulation, manipulation, distribution, rebalance, like I pointed out on that 15-minute chart, and then redelivery. So we got that redelivery, which is now targeting that 4-hour fair value gap. Okay, a little bit more tricky, right, when it's stuck inside the range like this, but that displacement, right, like I said, would have been something that reasonably could have been participated in. The mitigation block being traded into and not closing below the midpoint, the breaker bullish was enough to identify a setup in there. You know, that would have been reasonable because it's at the macro, targeting simply the highs up here. If you even thought market maker buy model like we were trying to see take place, right, or see if it would take place by getting up above this level, you still had an opportunity to trade that even though it turned around, right? So profitability was offered in there, or at least successful trades, right? This one right here is obviously the best move of the day that we framed out. Literally did exactly what we said it would do if it got below it. It'd break down displacement through it and through this low, come back, treat this as a market maker sell model. Right, you notice this too, from this high to that low. That's the previous accumulation in this buy side to sell side market maker sell model movement. Small little fractal of a market maker model. Failed buy model, completed market maker sell model. Right, beautiful too. Second stage distributions down here, right? First stage here, and then second stage down in this low, right? In this bullish order block, which is part of that mitigation block. But the bullish order block, both got traded through, both respected as a bearish PD array when they got violated, turning to a inversion. Okay, one here, displacement, accumulation, manipulation, distribution. We got a small rebalance, which is also in second stage distribution. And then price redistributed down to this 4-hour fair value gap. Okay. All right, I talked about this low to that high, breaking down, getting below that low, turning to a bearish breaker. Price offered another idea in there, right? If you like the breakers. Okay. So again, hopefully you guys have been able to follow along. Hopefully this stuff has made sense. A little bit more tricky morning, but nonetheless, right, we called things before they happened, both buys and short ideas, both of which offered an opportunity. The decision that you got to make is obviously, you know, which side made more sense, and also which concepts that may have been spoken on today can be utilized in your own trading. Right, and then of course, if you have any questions about anything we've talked about today, you can let me know, and I'll be happy to answer your questions. Like I said, if this regular trading hours gap as well was to be traded through again, the only reason it would do so is to go lower. You guys remember me saying that? And what did it do? It went up, kind of pump faked that it was going to create a bullish run, broke down, creating a bearish breaker here. That's basically what this ran up into. You take this high to that low. It's also optimal trade entry for those that like that model. Targeting the 4-hour level here, and then also the low right there. Okay, so this is also being treated as deferred liquidity. Right, like we've talked about that as well recently. Just yesterday and the day before that. Trading into that, if it is aggressively going to trade into it and then retrace, that's deferred liquidity. Narrative does not change underlyingly unless it breaks down below 3 PD arrays aggressively to the downside. And we need it to get down into this level. Right there. So he's going to have to break through that. Okay. I'm very curious about how far it's going to want to go in here. Okay, so a full 4.5 standard deviation, right? We went down to 2.5. That triggered in the rebalance in the accumulation, manipulation, distribution in here. Rebalance, treated this breaker as a balanced price range. This was also a market maker sell model inside the larger market maker sell model. Okay. Massive run, huh? That rebalance and the redelivery. Very nasty the first hour, first half hour. But nonetheless, once it broke down through that first presented, that was the opportunity. Now that right there, that is a pretty solid missed opportunity right there on my part. I missed this one. It is what it is. Coming off some kind of nastiness. And of course, as I was flipping through, pulling out the new contract month, it starts engaging, of course. Probably should have did it later. But yeah. And then this one too, this one here is also a missed opportunity. Breaker. Came back up into the breaker again. Notice how it didn't tag the 4-hour fair value gap there. So it left it available, ran up into it, and then one more attempt. So yeah, anywhere in here, right, could be continuation. Not once as price was going lower did I say, oh, we got to watch for price to run back up to the buy side, right? In this scenario, with what it was reaching for, we didn't say, look for it to turn around. So you shouldn't have been thinking, oh my gosh, this stuff is not trustworthy to reach for this gap that it was clearly reaching for. We also see the confluence in here. So that market maker sell model extension from the smart money reversal to 2 to 2.5 standard deviation, which triggers in retracement, to the 4.5 standard deviation, which is a full price swing generally. Like if price is going to retrace, and this whole market maker sell model is just that retracement, which it is. Most of the time, this 4.5 standard deviation, you got to watch out because it could present you with strong reversals, because that's a full price swing that's been created, essentially utilizing the market maker sell model smart money reversal projection, right? You can also use this idea when prices offering the sell side of the curve. You take the smart money reversal, right? So the breaker, right? You move up, try to find one on like the 5 or 15 minute chart, like this is here. Take it from the high to the low. If this is, say, the sell side of the curve, and you're looking for a buy model, you can also kind of couple, whatever projection you get from the high to the low with the sell side of the curve and a PD array that it may look to reach into. Like in this case, it's the 4-hour. Okay, the 4-hour fair value gap. It's kind of moving past it, huh? It's pretty aggressive right now, going down into that. But you can make that projection and then see where price reacts. A lot of times it's going to react to something like this. And then once it starts to continue, say it creates, something like this, where you expect a smart money reversal to take place. Okay. Then in that case, you could then take wherever the low is to the high, right? Or, most of the time the high up here. Let's actually do this real quick. Okay, say it does something like this. You could take that low right there to that high, and then you can get your projection going to the buy side. So you can see how versatile this understanding is, because you could frame out how deep a retracement for the sell side of the curve should be, how deep the sell side of the market maker sell model should be. So the left side or the right side can be projected like this to get a rough estimate of where price could potentially reach into. before it reverses. And you couple them with PD arrays, right? So this is my favorite projection tool other than the Asia central bank dealers range power 3 high or low of the day projection like this. See how it literally picked the high of the day so far? This projection is not random. It's from the Asia standard deviations. You take Asia's range, make a box, project it up once, twice, 3 times. You want to see it stay in between the first two. And then same thing with central bank dealers range. You take the box, measure it up, 1 to 2 standard deviations, and you want to see accumulation happen, then manipulation to one of those levels or close to them. Ideally, when you can couple it with a PD array as well, is something that that makes it even more effective. You can do that, right? And then once you get a change in state of delivery or a shift in market structure, or you can map out the power 3 delivery, or you can map out a market maker sell model where the smart money reversal took place in that area, then you can just operate the market maker model, having a good confirmation that the high's been set for the day. Does that make sense? I hope that makes sense. But yeah, in terms of projection, that's my favorite ways of doing projection. And it's highly effective, right? Like, look at what's happening here. If it sets the low there and then rapidly starts to increase up there, it's going to be a testament to this idea. You could see how this thing has been magnetized. This is previous day, right? June 15th's regular trading hours gap. It's so inefficient. Same thing with this down here. I wouldn't necessarily want to see it go all the way down to there, but hey, we'll see what happens. FOMC, depending on how aggressively this trades lower, and depending on what's said and whether they give a rate cut or not, may determine the real likelihood of how aggressive this is going to trade into that, if it does at all trade into that. But we do have this inefficiency, so you could see how aggressively it repriced into that. We mentioned this area as a potential target too, if it was to break down, along with this 4-hour fair value gap. So you could see that those levels, us paying attention to them, was absolutely valid. It was just a little tricky in there, kind of hung around for good reason, right? It gets you thinking, well, is it really going to go there? Right? Are we going to run to the buy side ahead of FOMC? This is a good example as well of being a day before FOMC. If there's a very obvious target like the highs up here, we got so close. When it's super obvious like that, a day before FOMC or a rate announcement or NFP, you can have a pretty strong inclination that they're probably going to deny that to build liquidity. Okay, and that's pretty much what they've done so far. So yeah, good example of that. So let's see what happens when we get into this next macro. Is it going to now use all of this displacement to then pull back against it? Right? Are we going to stay in that range? Or I think this may be pretty likely for them to retrace. The macro comes in and they give it one more leg lower, targeting that lower level. When we go to the 15-minute chart, you can get an even larger projection for the more pronounced price swing if it does want to look to go all the way down into that, right? And come to clean some of this up. This is the 15-minute projection. Each time frame, right? I don't want to not mention this. Each time frame has its own structural projection levels. So this is the 15-minute. When you go to the 10-minute, this is the most recent swing low relevant to this turning point, right? And as you go lower, you start to get closer and closer to that time frame's projection, which is more short-term in nature. The ones that are more long-term in nature, the ones that you should probably stick with at first, are these larger ones like this, right? Go to the 15-minute, find this on the 15-minute. It gives you a more higher time frame perspective when it comes to the projection idea. Okay, so stick to that, and then over time, those of you in the private group, if you like this stuff right here, we could work more closely on it. But this is a good baseline, right? If you have a buy model and you can frame out the start of it, just project it lower, match it with a PD array, or this, right? Or this, depending on if this is going to be shallow or not. And then once it creates something like this, just the other way, so like a high, low, higher high, or a failure swing, mitigation block level, turnaround, you could do a projection on that and then project it above and see if it could line up with like this or something beyond that, like this high up here. Like for example, with this daily chart, how you would get the projection is you take the lowest low to that high, project it up, and you get projection levels that you could then anticipate going into the future. Okay. Same thing with this, right? High to low. Of course, you can move it down a little bit, see if there's any other levels you could anchor it to. It's not a fractal low there. Let's see what happens when we do this. Yeah, no. Oh, wait, yeah. That's weird. It's not a fractal low. It's a breaker, though. That high to that low, look at how perfectly it aligns with these projections. These projections aren't random either. They're highly accurate, which I showcase this all the time to you guys. You see how there's that swing high right there now? You can get these levels, but also get this one too. But yeah, so hopefully that makes sense. I haven't talked in depth like this on projections, so hopefully that was helpful to you. At that 16-hour, I would prefer, given that this is a 16-hour fair value gap, it's a higher time frame level, if we are going to see the buy side continue, okay, if bullishness is going to be reliable right now, and that would be the expectation, right? Say that's the expectation. How deeply will we like to see price trade into that fair value gap? We go from this low up to that high. Let me know in the chat what levels. There's only 2, right? Or if you have the 8th levels, there's 4. But which areas in this gap would promote the strongest buy side delivery signal? Let me know in the chat. Alvinity, anything's possible, brother. Exactly. Be on oxygen. Exactly. 75%. Preferably, we don't even meet that. And then we want to see this start accelerating aggressively. If it does that, we're still back in business when it comes to the buy side being respected. We also still have this accumulation in the buy model we talked about. Okay. Okay. We're getting close to the macro, so I'm curious to see what can be offered in here. This could be a potentially small market maker buy model if this gets above this candle here. Okay. And this whole range in itself, if we can get above this high, this will become our accumulation for this overall market maker buy model. Otherwise, it'll retrace, fail to even get beyond the 50% here from this high to that low, and then we'll continue, and then it'll offer another market maker sell model, potentially looking to come right to the 75%. But yeah, beyond oxygen, looks like you've been paying attention, bro. I'm glad to see it. But yeah, if I'm on this higher time frame and I have a PD array that we're trading into, in order for me to continue to trust that this is really reliable to keep going higher and this PD array is going to be trustworthy, I would prefer at a minimum, right, we stay above the 50%. Ideally, we stay above that 75%. Ideally, we stay in the middle portion of that 75%, which is the 8th level, which is where we're pretty damn close to. Right there. Very close, if not right at it. Yeah, it's like literally a little bit below. This right here, you see that? The FEG, this little box, that is a first presented fair value gap from a couple days ago. So that's a deeper context. All these different boxes you see in here, it's just stuff that adds context. If I'm bearish and it breaks through them, I want to see it respect the midpoint. See how it did that here? Breaks through, comes back, respects the low portion. That's the bearish breaker we talked about. So as it's going lower, I want to see these boxes continue to respect the downside movement. Or if we're going higher, I want to see them continue to support the overall context of price going higher, adding further context to the downside movement we call out or the buy side movement that we talk about. Okay. So it looks like it's a lot of noise, but it has a purpose, right? And we have our entry models. We have our framework, which is market maker models and power 3. And then the entry models, I have my ones that I use, which many of you guys use as well: breakers, mitigation blocks, order blocks, fair value gaps, whatever is showing in price, right? That makes sense for us to execute on relative to the context and what we have determined on that daily chart, or just simply the higher time frame chart, right? When it's in line with that and the macro presents us with a move, right? It lines up with our overall model we're looking for. Watch this in here. Breakdown, low, high, lower, low. Watch that wick. But when all that stuff aligns, right? Some of these different boxes you see in here, they're just added context, right? I'm not looking to think, oh, I have to take a trade here, or that's another trade, that's another trade, that's another trade, and get analysis paralysis. That's not the goal, right? These things just help students see the context, right? And if it's going lower, we talked about order flow yesterday in my private group. So with the stuff that we talked about there, and the stuff that we talk about here on this YouTube channel, now when you see these boxes in price and you hear me talk about a narrative and where it's going to go, hopefully it's less noisy, right? For some of you, maybe it is a little noisy. But again, this visual is very nice because if it's bearish or bullish, it's going to have to respect these towards that direction. And if it's bullish, breaking through them, it needs to respect that upper 75, 25, or upper 75 and 50% of whatever box it trades through. Okay. And if it continues to do that and respects the fair value gaps, order blocks, and wicks the way that we describe, as we're looking for, something hypothetically going higher, then we have really nothing to be concerned about, right? And then same thing's true when it goes lower. If we find a setup and it starts pumping lower, we want to see every box that gets traded through respect the midpoint to the lower 25%. And then continue to do so as it returns in. Keep going. 50% of the wick, keep going. Order block, 50%, closing below 50%. We talked about this potentially giving a market maker buy model. If it gets up here, it's not even giving us that in the slightest bit. So all this was a retracement. Talked about this breaker here. I've got that wick. Price is holding in that. And so, now it's looking to continue to go lower, it seems. We also got this 4-hour fair value gap. We're now below the lower 25, lower 50. So if it's going to keep going lower, we want to see that be very sensitive in this macro. We want to see sensitivity. If this high is taken out, just like we talked about earlier, this then becomes a mitigation block. Low, high, failure swing, break above that high. And then when we take this high out, right, we could then see this as a potential change in state of delivery. Right, consecutive down candles as we move up in time frame. Stutter candle, consecutive down candles. If this gets above that, that's a very, very strong change in state of delivery. And if it doesn't do it, then we haven't changed the state of delivery, right? So we'll keep going lower as it looks like it's doing here, right? So again, it's all pushing to the downside at this moment. We got SMT right there. Got YM. I mean, that's just gross. Back and forth. Very, very pretty move on the Nasdaq. ES was pretty good too. We have this high, low, failure swing. Break down below this low. That low, this last down candle, becomes a mitigation block as it looks to pursue these equal lows and this fair value gap, right? So again, this same characteristic here to the downside will get flipped if this low, high, failure swing ends up back above this high here. That is significant because, again, we are in a bullish trend. We're just in a mode of retracement at this time, unless it was to break down through these levels. Because, again, we have our invalidation levels, which are 3 PD arrays being violated. Well, that's the easiest one to go off of, so we'll just stick to that. 3 PD arrays being violated to the downside, okay? There's other ways, obviously, to add on to it, but, again, we need to master one before we master another, as you guys are learning, so yeah. Big drops. So yeah, let me know in the chat if everything makes sense, you guys. Do you guys have any questions? I know I've kind of thrown a lot at you guys, but you know, these calls go deep. So if you have any questions, just let me know. Just let me know in the chat. Just throw a question in the chat. If you guys do get value and you have been getting value, don't forget to like the video. It definitely does a lot for the channel. It tells me thank you for doing this for free every single week. I mean, really, not many people on YouTube do things like we do, as consistent as we do, you know, and are willing to sit here and go in depth and answer every question and, you know, just go to the lengths that we go to make it so every question gets answered at some point. So if you guys could do that, I'd really appreciate it. Help the channel out. But yeah, again, if you're new here, welcome, right? If you, again, there's a lot we discuss. So take advantage of asking questions, because that's why I'm here. I've shown multiple times that I'm willing to even miss moves while I'm answering questions, right? Because I can find a trade setup at any time during the day. I love the New York session. That's where I live. That's where my business is. But I'm not concerned, right? Bro, you open a whole new world. Hopefully I can be that calm, and hopefully I can create that much. No, there's no hope, brother. There's no hoping. If you're here from this day forward, you got to say, this is going to be what I'm going to do. There's no hope. I am going to do this. I am going to have, you know, all these things that, you know, you want your mindset to become and your skill set to become. There's no hope. We don't run on luck. We don't run on hope. We run on a certainty, because we put the work in, and what we do actually works, right? And I come out and show you to build that belief that it absolutely does work and it is worth spending time on, right? So yeah, I appreciate you saying that. See, is there any questions? Okay. All right. So yeah, we're inside that macro. So let's actually hop back in, get in focus again. Okay, let me see. Is there any SMT at the highs? So there's SMT at those highs right there. The S&P, if this was to break down below this low, that may set up a type 2 dealing range going lower, low, high, failure swing, breaks that failure swing. We'll have a little breaker in here. And then as we go from this high, low, failure swing, breakdown, this low, if it goes lower, right? If that is going to be what its intention is, it should respect this as a mitigation block going lower. Otherwise, a break above will turn this into a bullish mitigation block once this high is taken out. Okay. So we're definitely at a level we got to be cautious because it could just react because it's still bullish. So I'd like to see one of these two scenarios unfold first and foremost, and whatever happens, that would be what I would focus on. You know, we are kind of just all over the place with what price is doing. Some of them are not doing anything. Some are moving aggressively. The Nasdaq looks more convincing when it comes to targeting further sell side. Now we got this order block here. So if it returns into this, since we're looking to target that low, should respect that, go lower. Go to the 1 minute chart. Let's go to the 30-second chart. It's very nasty in there. We could see that this was just a retracement to go lower. Buy side, sell side. What do you guys think I'd be thinking looking at this? Market maker sell model. Targeting that low. Didn't really offer one little return into that. I was kind of waiting for that. That would have been something I would have been willing to touch on. Taking it down below that. Let's see, where is my projections? Yeah, so we're inside that 2.5 standard deviation still. Oh, there's one little return into that. Yep. Oh, we didn't take that low. Thought it already peaked down below it. So let's see if it can give one more little peak below that. Again, this is the standard deviation right here. You notice how it came down into it? What did it do? Promoted a retracement. It rapidly ran into that level, targeted the higher time frame level. Whoops. I wonder some stuff is missing. It's on the wrong one. I was wondering why the hell some stuff was missing. So we take the 75%, take the high of that regular trading hours gap. Okay. Yeah, like I said, I should act sensitive and push it lower one more time. And from that point to there, it's another 45 points. So we've called or talked about 3 different things. well, multiple over here, right? This one, the buy. Talked about the short here once it broke through the fair value gap, the first presented. Talked about this as a rebalance into the bearish breaker, low, high, lower, low. Talked about this, right? Continuing to hold and keep going until we hit this level. It was clearly reaching for that 4 hour, came down, tagged it, reattempted, closed below this wick, displaced below this up candle, came back up one more time for immediate rebalance. That's a highly bearish signal. Immediately rebalancing the previous candle and then comes off of it. You could enter when it does that and you have a target, you can enter right on the next candle that forms, especially if it trades back into it. That's how you would go about entry tactics with immediate rebalance for those that know that concept. You could see that it offered an opportunity. And then we hit that 2.5 standard deviation, which is where we expect a retracement could take place. Price came up. I talked about this low, high, lower low being a bearish breaker, right? If you guys remember, I talked about saying, I said, watch this level here for continuation. Came back up into it, respected it, offered another move. I just talked about this in here before it tagged that low. It's already tagged that low. It makes it more risky now. But it stopped before that low, ran up. Right? This is also the low of the 4 hour fair value gap. It's also the order block in there. Tagged it and then declined, blowing this low out with much more aggression. Okay. And then when you scrunch this stuff up like this, we have accumulation for the day, Asia going into London, which was manipulation. It's also original consolidation, equal lows, first stage accumulation, second stage, smart money reversal. So accumulation, manipulation, or the buy side of the curve for a sell model. Hit the standard deviation, price declined for the distribution, rebalance, also the sell side of the curve in the market maker sell model. And then price declined after the rebalance to redistribution. And you can also see it happening on a smaller scale. Accumulation, manipulation as we go into the New York session. Then we have distribution, rebalance into the breaker, and then redistribution, and then we got rebalance again, redistribution, rebalance again, and then redistribution again as we tag the level that it was reaching for. Okay. So again, I hope that you guys can see this stuff. If it is visually able to be seen and conceptually it makes sense up to this point, maybe not entirely, but you can get the gist of what you're looking at right now and what I've been describing. You're making progress, and you just got to keep showing up, not only at these calls, but showing up for yourself in the back testing. Okay. Because it absolutely works, right? You can look at this too. Accumulation, manipulation, distribution, rebalance, redistribution, which is inside that move that we talked about in this order block. All right, can you guys see that? Can you see how that works? Yeah, like manifestation to be a full-time trader. Yeah, exactly, Albinity. You got to fill your head with positivity. Even if you don't believe that you're a good trader yet, or you don't believe that you understand stuff yet, every day that you wake up or look at a chart, say, I understand this. This is becoming easier to me. Anytime you make a mistake, you got to reshape the way that you view it. Say, I've made a mistake, but everybody makes mistakes on their way to greatness. So it's a lesson to be learned, right? It's something that I got to get better at, and I'm getting better at it, and I'm appreciative of the opportunity to get better at it. That is a whole lot better when it comes to your mindset, when you're repetitively saying it to yourself, versus saying, I'm a shitty trader, I'll never succeed, this is impossible, why am I even doing this, I'm never going to do this, right? Like, you could see the difference in how you're going to start thinking about yourself. I mean, it takes a level of delusion at times, right? You may have just blown your account, right? And for you to sit there and be like, oh, well, that's part of the game. It's part of the learning process. I may have broke the rules and I have places to improve, but if I don't do this, I'm not going to be able to tell myself what I shouldn't be doing. So I'm grateful that I just blew my account, right? Like if you're in that struggling point and you're facing that type of stuff, that's what you want to say to yourself. Okay. That you want to reshape the thinking. Because if you don't, if you've been the type of trader that said, oh, I suck and all this crap to yourself nonstop after mistakes, or if you just fill your head with fear constantly, just think about the difference. Think about how that's impacted you thus far, right? And how it's going to impact you if you switch it to more positive vibes. You're going to be less depressed. It's going to be easier to overcome losses at times because you're making it a positive experience, even if it's negative. It's going to encourage you to want to be that way. It's going to encourage you to want to be the way that you want to be. Disciplined, calm, not concerned about missing a move, right? So remember, the person you look at in the mirror is the person that has to trust you the most. If that person doesn't trust you with your money, you could imagine that this is impossible. And it's not going to be fun if you do things that way, right? If you're just like super negative, this stuff is hard. And anyone that tells you otherwise, they're not worth listening to. It's very difficult. It's a constant self-management. And if you can't get to the point where you can tell yourself, I see the trade setup happening, but I'm okay. I'm not going to take a trade, right? It doesn't fit this rule or that rule or whatever the case may be. So I'm not going to take a trade, because if I'm going to have rules, I'm either going to follow them or I'm not. Just like if you're a trader overall, you're either profitable or you're not. It's really black and white, right? So, these things, you got to take them serious. You have to. And if you have issues where you're attacking yourself constantly, or your confidence is low, or, it's hard to push the button, and when you're in the button, you're terrified, start to write down the way that you think about things, right? The way you talk about yourself to yourself. Because many times you'll have every ICT concept you'll ever need and you won't have to learn more, but you're still struggling because you either missed a trade setup, you're hesitating to get in, you're wanting to get out instantaneously because you don't trust yourself. There's a multitude of different things that could be going wrong, and it can all stem from the way that you speak to yourself. You want to speak life into yourself. You can't expect no one else to do it, right? I try to help you guys. I try to be positive and, be a good influence on your trading and just like your mindset and all that. And I try to showcase the right way to do things. But again, that can only go so far. At the end of the day, we all have to walk that road at some point. And we have to wake up and at some point agree with ourselves that, yeah, I trust that person I'm looking at. That person is responsible, right? That person is trustworthy with my money. So I have no reason to be worried about it. I have no reason to worry if he takes a loss, because he's not going to overtrade, or her, right? If you're a female, right? Stuff's very important, right? It's not the sexy stuff, but when your bank account can grow and you don't need a job because you did this work alongside the other technicals and you put in the work to understand stuff, both personally, mentally, it'll eventually manifest financially, for most. It's just people quit. People don't take it serious. They treat it like a hobby. They want to live that laptop lifestyle on the beach taking trades, but they can't spend 5 minutes back testing every single day. Those two things can't live together. So you want to think about these things. Again, I hope that this stuff is beneficial to you guys. Okay, if you get value, show me that you get value by liking the video, subscribing to the channel. Again, hopefully everything that we talked about makes sense. We did talk about a lot of stuff. Very jam-packed video. So hopefully you guys are able to take away some important insight. But I think we'll leave it here, right? I'd be watching to see if this is just simply the wick that's going to form on this candle that's simply going to set up the next day to then try to come and take out this liquidity up here. We're not sure. Nobody knows what's going to happen with FOMC. Right? You never know. This thing could come screaming down all the way into the middle of the range, right? And then because it's the summer months, we could get a consolidation. I don't think so. There's a lot of things positive happening. The gas prices, oil prices are tanking. They're talking about rate cuts. Like there's so much stuff happening that is positive, right? Aside from like innovation with these AI companies and IPOs coming out that just added $2 trillion to the market cap of the overall market. Shout out Elon Musk, right? SpaceX. So there's lots of stuff happening. So we'll see. We have bullish seasonal influence, like I talked about the other day. So that's a heavy influence. But clearly the idea of this going lower to retrace, like I said, could be the case, has definitely unfolded, right? And we talked about shorts all along the way, framed all this out. So again, I hope that everything made sense today. And going into tomorrow, we'll see how this closes, and I will give you guys my thoughts through text in the free group. I'll probably send a post here on YouTube as well in the community tab, but those of you in my private group will be live, navigating it live again tomorrow, as always. But yeah, so I would look to see if we're going to recover a little bit. You know, going into the PM session, we'll see. We do have SMT at the low, so that makes me feel like it could very well be a possibility. You know, we flirted with this upper portion of this regular trading hours gap from June 15th. Which again, it's that yellow box. It goes all the way down to there. It's all inefficient. There's no orders in that area, buys or sells. So it is a risk of them trying to come all the way back down. But we'll see. You know, we'll see what FOMC brings. But up to this point, decline. We're still in a bullish trend. The question is, how far is this going to want to go? If it's going to be bullish, like Beyond Oxygen mentioned earlier, when I asked you guys the question, where should we expect, if we're bullish, for price to stop at, right? At minimum, the 50%, but preferably the upper 25%. Preferably, we don't even break past this 8th level, and it kind of hangs around in there. Maybe even comes up a little bit. And then tomorrow, hopefully, you know, we could see the buy side continue, depending on what FOMC does. Okay. So, yeah. That being said, again, thank you for your time. Hopefully, you guys got value from today. Talked about a lot of stuff. This is a worthy rewatch for those that showed up a little bit late. Talked about a tremendous amount of things. And, you know, if you guys have any questions, let me know. You can leave them in the chat. You can leave it in. There's actually, let me shout this out too. There's actually direct messages now on YouTube, which is pretty interesting. So if you want to hit me up in direct message on YouTube, so I can answer your questions, we could do that too. But yeah, again, thank you guys for your time. Let me know if you need anything. We'll be back live again here on YouTube on Sunday. And the next month, right, we'll have our little week-long live calls again. But up until that point, I'll be live with my private group every single day, and then you guys here on YouTube 2 times a week, Sundays and Tuesdays. Okay? So with that being said, let me know if you guys need anything. Hopefully you guys got value. God bless you, and I will catch you guys on the next video. All right, have a good rest of your day, you guys.